Hi, this is Paul Dobson from the Vendor Finance Institute. One of the things that we've found as a vendor financier is that from time to time we come across investors who would like to do a joint venture with us. It's something that we enjoy doing. It's profitable, it's good business, and one of the hard things to do is to show the detailed figures to the investor. That we found it quite difficult in the early days until we developed an Excel sheet, and now we've finally turned it into this product here called the Joint Venture Calculator. It's a product which allows you to do the what ifs be a long time before you give the numbers to your investor, and it'll actually print out a report for your investor showing the details of all the money involved and how the profits shared up and what their expectations can be in the way of the percentage return on their contribution. What we're going to do in this video is quickly go through the data input area of the software. Then we're going to have a look at what happens when we click the Start to Calculate button here, and then we'll have a look at the report that the software generates. Starting up the top at the data input area, we've got this area here detailing where we give the details of the investor's loan and their contribution as well. In this area we detail how we're going to on-sell the property, the price and the interest rates we're going to charge, etc. Over here is just the address of the property, and one important factor is while we usually do our joint ventures on a 50-50 basis with our investor, some vendor financiers like to vary the percentages a little bit, and they can do that in this area here by putting in the investor percentage share in each of the deposit areas, the monthly cash flow and the back end profit. So I think the best way to show how the joint venture calculator works is to put in a transaction that we recently did. So we'll start entering some numbers right here. We bought the property at a deep discount for actually $293,000. We didn't have any other costs involved in purchasing the property, so we just put in a zero here, or you could leave that blank. The investor's loan was a 90% LVR loan. You could choose principal and interest, but in this case the investor's loan was interest only. Their interest rate was 7.5%, and the term of their loan was 30 years. Some people do and some people don't pay their investor a return on their contribution right from the beginning of the transaction. We happen to do that. We pay 7% to our investors on their contribution right at the beginning of the transaction. We also share the deposit, the positive cash flow and the back end profit over here, but we do that. We do pay interest on the contribution right from the beginning on a monthly basis. If you don't, quite simply put in zero in that field right here. Over here now we're going to try and calculate the contribution that the investor has to make. In this particular case, the legal costs were $1,562, but as always we only purchase properties where the vendor pays our costs. So the vendor paid our legal costs in the purchase here, and the vendor also paid the stamp duty of $7,838. So we put that in the vendor pays column because our vendor actually paid those costs. We didn't have any repairs on the property, so we can either put a zero in there or leave it blank. In this case we'll leave it blank. Our loan costs were $600. Our building inspection was, let me refer to the notes, $400. The pest inspection was $330. The mortgage insurance, because over here we have a 90% loan, our mortgage insurance was $3,135. So we didn't have any other costs in purchasing the property. If we had them and then the vendor was going to pay those extra costs, you'd put it in here, or if we were going to pay those extra costs or the investor was going to pay those extra costs, they'd be put in here, but there weren't any, so we'll leave those blank. Moving over to the area of how we're going to on-sell the property, we on-sold it for $343,000. we got a $15,000 deposit. The term of the purchases, the vendor finance purchases loan, was 30 years under an instalment contract, and the interest rates that we charged were 7.5% for the first year. Look at the notes again. 8.43% for the second year, 9.36% for the third year, and 10.3% thereafter. Now, some people may not use this technique. They may just have a consistent interest rate all the way through. We use this technique to encourage people to refinance out, and that's the way it's used. But if you have a consistent interest rate throughout, you enter the same figures in each of those 5 fields there. So moving across to the address of the property, we can just put 2 Smith Street, something original like Jonesville, and in this case New South Wales. And we come now to the area of how we're going to arrange the profit share. Normally we'll do our profit share on a 50-50 basis, but as I mentioned, some of the vendor financiers we know are happy with a variable split. Let's, for this transaction, say that the deposit, the investor got 60% of the 40% of the deposit, and the positive cash flow was split so that the investor got 60% of the monthly positive cash flow, and the back end profit was the investor, because this is all the investor's share here. The investor's share of the back end profit is 50%. You can see that the percentage signs come up once you enter the figures. It's now time to press the Start to Calculate button, and we can start to see the results here. It's quite just simply showing the vendor finance joint venture figures for 2 Smith Street, Jonesville. It's going down with the details of the investor's loan. Here we have here that we've entered up in the top area. It's also come up with a total for the investor's contribution. It comes down here. Total investor contribution, you can see, is $33,765, and that's made up of all these figures above here. Of course, these aren't included, these 2 figures here, because they're paid by the vendor. The VF buyer details, you can see it's selling for $343. $15,000 is the deposit. Terms of the loan 30 years, and in our varying interest rates, which of course in some cases will be consistent with people who just like to have the one interest rate for the first few years or the whole time. Coming down to further results, we can see that the total positive monthly cash flow and less 4.4% loan administration costs, in case you hand the transaction over to a loan or vendor finance specialist loan administration company. And I'll give the Vendor Finance Management Proprietary Limited a plug at this point, but the return total positive cash flow in year 1 is $343, in year 2 $542 per month, in year 3 $744 per month, in year 4 $950 per month, and because the interest rate stays consistent, in year 5 $950 a month once again. The vendor finance, what basically the vendor financier or the investor wants to know, I should say, the investor wants to know is what sort of return are they getting on their money. Well, these columns here below end of year 1, end of year 2, end of year 3, end of year 4 and end of year 5 show the results at the end of each year, if at the end of each year the vendor finance buyer had refinanced into a traditional loan. So once again, the figures in here show the numbers and the percentages if the vendor finance buyer had refinanced into a traditional loan or sold the property or got won Tats Lotto or the lottery and paid you out at the end of year 1, 2, 3, 4 or 5. These would be the figures and the resulting figures for that whole transaction. You can see if they paid out at the end of year 1, the total annual return for the investor would be 72.82%. Highly unlikely that they're going to refinance at the end of year 1. More likely somewhere between the end of year 3 to maybe the end of year 4. You can see that the total percentage return at the end of year 3 is 106.51 years, so it's taking them 3 years to basically double their contribution, but the annualized percentage increase is 27.34%. This is the money that a bank would have to give them if they put that total contribution of $33,765 into the bank. The bank would have had to pay 27.34% to give them the same return. At the end of year 4, it's 23.2%, and the end of year 5, their return is still 20.48%. A very good-looking percentage earning rate. That's what you get on the screen in front of you, but you need something to talk through the process with your investor. So up here to, in this case, file preview. It could have been print, but we'll preview it here. Here is the one-page report that the software prints out for you to go through the transaction with your investor. Once again, it's set up the top area very much the same as the data input area, with the final result here, the total contribution being $33,765. And we can show the investor how we plan to on-sell the property with these figures here. Once again, we've got the same calculation result down here, end of year 1, 2, 3, 4 and 5, with the percentage figures down here. And you can see that we have the breakdown here: 40% of the deposit, 60% of the positive cash flow, 50% of the back-end profit. And because we've elected to pay interest on the investor's contribution, that's also included here. If you weren't paying any interest, that would be zero, and that line there would also be zero. So it's a very easy program to operate, as you can see, all entered within a couple of minutes, with a report out to your able to be printed out to your investor also within 2 or 3 minutes. So once again, you sit down with your investor and show them these numbers. They really do get a great idea of what's going on. So this software is available at www.vendorfinanceinstitute.com.au. I'll say that again, it's www.vendorfinanceinstitute, all one word, .com.au. And thanks very much for your time.